Bank deposits are on the rise right now, even though interest rates are at rock bottom. Americans now have nearly $10 trillion in their bank accounts. That is an all-time record, but it might also be a big mistake. Here to tell us why is personal finance expert Carmen Wong Ulrich. She is the author of Real Cost of Living. Carmen, good morning.
Good morning, Jeff.
Why are so many people putting money into cash right now?
People are scared.
Yeah.
People are very scared.
By the markets?
Absolutely. First, by the markets. I mean, look at this volatility. It's 6 times the volatility in the stock market that we've had for the past couple of decades. And we're talking about losses since 2008 that many of us haven't seen in our lifetime. So tremendous losses. People are nervous in what's called a flight to safety or perceived safety.
Yeah, so by the way, before we get to these rates, do you see that volatility ending anytime soon?
Not really.
Okay, there you go.
I wish I could assuage your fears. That is actually going to be pretty much the new normal. We're going to see this amount of volatility. It's just too easy to be volatile right now. It's easy access to trading, even for individuals. So we're going to see a lot of volatility. That's not to say you can't use it for your benefit, but for folks who can't stomach it, they're fleeing into cash.
Let's take a look at what some of the average rates are right now. Average one-year CD is yielding 0.4%.
This is pretty low, 0.4%. These are a bit dismal if you look at it. You look at money market mutual funds, even less. We're talking pennies, 0.04%. And this is the thing when it comes to treasuries as well. 10-year treasuries yielding about 2%. Now, keep in mind, though, when it comes to treasury notes, when it comes to CDs, you don't even get that interest unless you hold it till maturity.
Right, you have to hold it for 10 years, and then you're still only getting 2%,
exactly.
Which you may actually end up losing money here. Let's talk about that part of it. When you're getting that kind of a miserable rate on a money market account, you're technically losing money.
Yeah, and let's talk about, so when we talk about the flight to safety, and folks think of cash as safe, here's the thing, even if you put it under your mattress, it actually decreases and shrinks every year. Even if you earn 1 to 2%. You're going to lose 1 to 2% because of capital gains tax, and inflation is around 2 to 3% a year. So you're actually not even preserving the principle of that you have, the money you have.
But it looks nice under the mattress, at least.
Well, if it makes you feel better, but sometimes we need to keep some cash, right? Emergency fund, you need that, of course. And folks who are really close to retirement are going to need to have less volatility and need to have more in cash.
So the recommendations are what?
Well, here's the thing. There are a couple places you can go. First of all, online checking accounts actually have no fee and earn a little bit of interest. Now, we're talking 0.4 to 0.9% interest. That's one way to go. 0.9,
wow,
yes, exactly. It's less than 1%, but it's something, okay? Anything is a little bit better than nothing. Online banks, okay, we know Ally, ING, they've always been good at this game. We're looking a little less than 1%. And here's a new player in the game. Credit card companies have taken to banking and offering you savings rates. Now, this is to lure you in, of course, to use the card, but they offer some of the highest savings rate. American Express Bank, 1%, no fees, no minimum. Discover Bank, 1.1% with a $500 minimum. So that's another option as well. And of course, CDs. If you're looking at a 5-year CD, you can lock up your money for 5 years. You can right now earn 2%. 3 years, 1.5, and 1 year, I know the average is 0.4, but you can find 1% out there.
It's stunning, the low numbers, the returns.
I mean, we were looking at in 2007, remember we were earning 5% on savings accounts? And those days are over for now, at least through to 2013.
Maybe in 15 years or sooner. Carmen Wong.
We can dream.
Thank you very much.